Hello, my name is David. In this session, we'll be introducing subledger accounting. Let's first take a look at the simplified acquire to retire asset business process flow, which consists of 6 key steps: additions, adjustments, depreciation, retirements, accounting, and real-time reporting. Let's look at the 5th step of asset accounting. Asset via subledger accounting engine creates journal entries for depreciation expense, asset cost, and other accounts. The Create Accounting Job program creates journal entries for transaction events in assets. The journal entries can be transferred to and posted in General Ledger. If you choose not to transfer the journal entries to GL at this time, you can run the transfer journal entries to GL program to transfer the journal entries to GL later. Asset creates journal entries that summarize the activity for each account for each transaction type. The Create Accounting process creates journal entries for the appropriate general ledger accounts. Assets via subledger accounting engine creates adjusting journal entries to the depreciation expense and accumulated depreciation accounts when you enter prior period additions, transfers, or retirements. Asset creates separate journal entries for adjustments to depreciation expense and current period depreciation. You can review the effect of your adjustment transactions and your current period depreciation expense separately in the general ledger. Asset flexibility setup allows the generation of accounting entries for multiple representations of the asset. In this example, the primary ledger represents the corporate representation for a French subsidiary. It uses the parent's US GAAP accounting method and corporate chart of accounts. It also uses the local currency euros and the corporate asset book with straight line depreciation method. The secondary ledger represents the French statutory representation that uses the French interpretation of IFRS standards, and the French statutory chart of accounts is also denominated in euros. The secondary ledger receives asset information from the tax book and can use different depreciation methods than those created in the corporate book, e.g. MACRS, Modified Accelerated Cost Recovery System. For consolidating to the US parent, you could also have a US reporting currency assigned to either the primary ledger or secondary ledger or both. Thanks for watching, and please go on to review the video of how to create and review assets.